Welcome to TradeTheMBI.com. This is John. This report is for the 10th. Well, we were just talking about this very issue yesterday. Once you have that shakeout reset take place and you start making higher highs, you better have matching or continually rising shakeouts, because as soon as it starts to fade, as it started to yesterday, you get a little bit of continuation. Now, at first, we expected the ABM to get caught up to where price was. That wasn't even an issue. The fact that you've got additional supports now that are above the ABM, above the Fibonacci 76, or in our case, the Fibonacci. But you have rising lows now with flat plateau high, which usually calls for pull towards that 50%. Question is, how high does 50% rise before it gets there? The reality is we're going to know at the 76%, which, if I can get that value up there so we can take a look at it, right around the 22 range, which still wouldn't be bad given the fact that we've had such a run anyway. The reality is, though, it really hasn't been overbought. The closest we got to that was the final high push. We've now cleared that. It wasn't even a positive extreme, so it wasn't required, but nonetheless, it still had some potency. But from a daily standpoint, just such a strong DOC spread from the other day. We actually began that right here as the orange met steel and actually crossed above it if you want to take a look at it from that standpoint. Orange was at 3, steel was at 0.5, so it was already a crossover there at the 28.53 range. So the fact that we even moved back up was just a bonus going forward, but it continued to accelerate that, turned it into a DOC spread, and now you have the effects of what a DOC spread does. Plain and simple. From an NQ standpoint, a little bit different situation because you had much deeper drop in the shakeout, and that secondary one caused that 50% retrace, which is why it's not as exacerbated as the S&P's move. So just a little bit of divergence. What's critical with this one is we've been talking about this range for forever and a day, simply because it was a support point for the market. As long as the euro was maintaining an elevated status, which I know, of course, everyone has a different opinion as to what real fair value is. Of course, the market always dictates that, but we knew that within this range above this 115, it was like 115.5-ish, right in that range. Here it's like 4.3. You had additional S&P support because that exchange rate was actually bolstering earnings. A break below it, putting it back into the range, certainly puts significant pressure on the S&P because it impacts earnings, because you're not getting that bonus, that extra 10-12% in earnings with the elevated exchange rate. So that's certainly why we follow that. And of course, the secondary battle is the flight to safety, because a little bit improvement in yield with rising interest rates, people are willing to say, hey, I'll take zero risk, even if I'm only getting a very tiny return, rather than being significantly risky at a market high. Now, that assumes the market's going to implode completely here. And like right now, we're only down like 12 points in pre-market, which is literally nothing. And even if we retraced all the way back down to that 28.20 or even a little lower than that, it still would not be a significant effect. It would be a healthy move. Oil back down at the bottom side of the range, theoretically with the amount of production ramp and that because of the elevated prices, you could see a significant down run, particularly as summer gets closer to an end, because you've taken advantage of people during that peak time, and now you're going to have, probably within a month, a significant decline. Plus, you also have a change in the way schooling works in America too, because now a lot of them start in August, and depending on the state that happens with that, that will actually lower demand because you don't have as much vacation use, and that can be significant because lower demand obviously is going to mean bigger surpluses, which not what they're going to want to see as far as drawdowns. And gold still stuck in this malaise because, again, that wage pressure, still waiting to see it. And when it comes, it's going to be late, and there's going to be a significant pop to it. You know, the best way to look at this 5K chart here is to shrink this baby down way back, because you can see where some of these lines come from. This was the last wide open right there at the 53, which we had marked. That filled the very next day on the move. Then going into today, but the one prior to that, 2031, that just happened to be one that had already been filled as well. Going way back from right up here, that literally came back, popped above, filled it again, and then continued up from there. So let's go to the current action. Look at nice and big. It's amazing when it starts to drop down like that. Really reduces it, and it wasn't a bad day. I mean, the reality was we had made those lows, filled it in, started to bounce, was back and forth for a little while. We ended up with a gold candle above 50%, which, given the narrowness of the range, 57, we had an upside of 62ish. Then it's fine. That's exactly what it did. So it's right on target. Then we ended up with a nice spread here, rising orange, that gave us a significant enough retrace to 50%. And then a little reset. We went back, couldn't quite get to the same highs, and then we had the orange spike start to take place right there as the two crossed over. And that was about at 61 for the short. Hung on for a few bars in between, and then it began its cascade lower. Once it was there, you couldn't get the reset of orange well till right about now, but you just produced a white candle, so we're going to have to add another line there. Just beautiful. I mean, what more do you want? That's just about as clean an action as you can get. Fills back that same algo level again, and then once that support was broken, they're able to drive it lower. You have enough people willing to exit to run for safety in the pre-market here, and we'll see if buyers are interested in attacking this on the return. I'm thinking probably not so much, but we can always be surprised. Sometimes with short viewpoints, it takes a little bit to get rolling, but there are enough people out there that think that the market is way overvalued that actually has a countering effect to the upside. So it's when people think that the market is going to just keep rising to infinity and beyond, that's when you really can get some nice short movement, because everyone is thinking the opposite, and that's usually how the markets work. Classic game theory. As always though, trade well, continue to follow charts as I put them up. Talk again later.